Every event that drives any market has a resulting volume flow consequence created by supply and demand. Supply and demand creates volume, and volume is the footprint of the smart money. That is why volume is so important. It is fundamental in determining direction of price. Okay, we've got a volume dot on the volume flow indicator to the downside here on the Renko chart of the ES continuous contract. We've got this short-term price action as down, reddish. Price action indicator, short term is the red line, is turned down. The long term is the green and black, black meaning it's also turned down. The volume simplified oscillator is also turning red here, meaning there's some significant selling pressure. We had the Wyckoff wave here. We see that the points move was just a no demand situation, and then it turned down again. No demand up because there's only 2 bricks up, and then it turned down. Now that wave is significantly smaller than the previous waves, so when the down wave continued, yeah, it's normally a selling signal, given the fact that all other indicators is also pointing towards a sale. So I'm going to take a short here right now. 3 contracts on my strategy. Sell 3. Right, we filled here. My stop at the moment is 2390.75 on 3 contracts, and my target 2387.25. So I'm just looking to adjust that. I see here is the low volume node for the past 3 days. It's at 2386.50, so I think that is probably a better target for me. So I'm going to just adjust the target to that 2386.50 level. Okay, that is adjusted. Now I'm looking for a stop. I'd rather put my stop up here, the high volume node, and there's a low volume node behind that at 2392.50. so that is where I'm going to put my stop, 2392.50. I'm just going to adjust this to 2392.50. That's my new stop. Adjusting, and there it is. We're up $37 at the moment, so we have to give this trade some room to breathe and some patience. This e-signal DOM view is very nice because you can see the volume profile here on your right hand side. The biggest volume being this level at 2389.50. That is basically referred to as the point of control, and it's trading just there at the moment. So we want the price to come down out of the volume node here. Then we will have a fill probably at this level, but it's got to trade through this volume levels here to the downside to reach our target. I'm just going to put my stop 1 tick behind the level I've chosen. I've put it on exactly the level, so I'm just going to put it 1 tick behind that level. When it's a strategy, you'll see this line here which is linking the target and the stop. So when we've got a fill either at the stop or at the target, it will cancel the other order automatically. On the chart, we have this line. I've put it on the chart and not as in a sub window like this indicators for easy reference. This is basically my structure when I take trades, and I want a yellow line and a black line, meaning the black going down, the yellow is the average that going down, the blue is the average going up, the white is the indicator pointing up. This is what I call the relative strength of the instrument on the chart. What this indicator is doing is measuring the ES against a chosen indicator of your choice, and I'm measuring it against the dollar index because I found that the mini is the best measured against the dollar index. When I took the trade, there was a black line, meaning the indicator is going down, and the average has turned yellow, meaning the average is also turning down. I will never trade against those two indications there. Then, of course, I use volume as my structure indicator, if I can put it that way, when I'm trading. And this indicator that I developed is I call the volume flow. If there's dots, it means there's also volatility. If there's arrows, it means there's no volatility, as calculated on the price. But this indicator is totally based on volume. It measures volume flow in 3 time frames, and when there's synergy or confluence, it makes an arrow or a dot. If the dot or arrow is on top, it means the volume flows to the downside, and if it's the arrow or dot is at the bottom, it means the volume flow is to the upside. I'm still thinking about if I want to make this indicator available to the public. At the moment, it's not available on our website for sale. I'm still thinking about that. I'll probably release just a few of these items, but I'm never gonna sell it to the public. This is the settings of my volume flow indicator. It's measuring 3 time frames. The short term is the chart time frame, and the immediate further medium term time frame, which is 78 minutes in this instance. The longer term is also measured on 5 bar intervals. The longer term interval I use is 156 minutes. I choose my time frames to be all multiples of 13. 13 is a Fibonacci number, and I found if I use those time frames, it works better for my indicators. So the Renko chart, although it's a Renko chart based on one point bricks, it waits 39 minutes before it plots the 1 point bricks. My next time frame I choose is double the 39 minutes, which is 78 minutes, and the next one is double the 78 minutes, which is 156 minutes. That's I use the volume flow indicator. So it's basically using 3 time frames for its calculations: the 39 minutes, 78 and 156 minutes. If there's a trend to up or down, there's an arrow on the top or at the bottom. On the top meaning the volume flows down, at the bottom meaning the volume flows up. If there's also volatility present, calculated on the price, the shape will be a circle and not an arrow. Then the volume flow is measured in according to an ultra strong trend, a very strong trend, or just a normal strong trend, or a normal trend color. Then we've got an exhaustion warning color. It's basically warning about volume flow that may be exhausted. Also, we got you can put on the sound alerts or the pop-up alerts, which will pop up in a separate window, warning you about the indicator triggering to the down or to the upside. And it's working very good for me because I believe in volume as one of the criteria that have to be present before I take any trade. This indicator, I'm still thinking about if I'm going to sell it to the public. At the moment, you will not get it on our website for sale. I probably going to release just a small quantity to my loyal supporters. This dotted lines here is a built-in e-signal indicator, linear regression lines. I put it on my chart twice, then I use the length of 80 bars with a 2 standard deviation, but I use standard error instead of standard deviation. I tick that, then my price source is high, low, close divided by 3. So I put the upper and the lower bands there, and then on the second one I change the standard deviation to 1 instead of 2, also using 80 bars. Source the same, high, low, close divided by 3, and I use again standard error instead of standard deviation. I found this lines to help me determining profit targets, entries, etc. If you can see, this is the outer line here and the outer line here of the regression channels based on standard error deviations. You can see the price reversed up at the lower band here, price reversed down at the upper band there, and you will always find, you can work it out, that the distance between any of these two lines is one standard error distance. And if you take a trade, for instance, which is bounced from the middle line here, you can work your target out 1 or 2 standard errors far away. The chances are very good that it will move at least 1 deviation in length from where it started. Start there, this one in this instance has moved 2 standard error deviations. Our trade is moving in the right direction slowly, $112 up at the moment. Where this is also, this yellowish line is also a standard regression channel. It's actually a linear square regression channel. 54 bars calculation, and the standard deviation 1.7 with 1 degree, and there's no shift in it. You will see with these two lines, like this outer lines of the regression channels and the linear square regression line, when they come together, like there also, it's narrowing. So that is natural support or resistance levels. Like here also, it's coming together, so we can expect here that the price will bounce initially, because where these two lines cross, it's making like a triangle shape, narrowing or expanding like there. So there in this area normally is a resistance area, or it can be a support area. You can see that price nearly reached this low volume area for the day, and it looks like it's bouncing from there. So we'll see. Also, this is where the lines is coming together or narrowing. The space is narrowing here, so that will also be a resistance area according to the regression channels. So I'll watch the trade. It has to go through here to reach my target. So if it doesn't want to go through here, I'm going to take profit or get out of this trade. The volume oscillator still shows red in the middle, which is a red line. So if the oscillator line goes through 0, the middle line becomes red. It's above 0, the middle line is green. So that is a very good indication also of which direction volume and price is going.